Hey guys, how's it going? Value Venture Investing here today. So today we're going to be talking about Tesla. Now I know we've been talking about Tesla a lot on this channel, but I felt compelled to do the video after Q1 2019 results came out. I wasn't necessarily going to make a video because they weren't all that surprising given the predictions that I've made. But they also had their Autonomy Day as well. And there was a couple little interesting things in there as well. So today we're going to quickly talk about their results, the Q1 results, if you weren't aware of them already. Then we're going to quickly go through their financials and the report that they had, give you a couple of key little things out of there. And then I'm just going to briefly go over the Autonomy Day, and I'm going to give you my thoughts on the company as a whole, where I think it's going, whether I'm going to sell my shares, stuff like that. So the big news was the revenue and the EPS. Those are basically the, what was focused on primarily at the during the earnings rather. So the estimated earnings was $5.8 billion, and they actually came in at $4.5 billion. So that was a huge miss. We'll get into the reasons why that was in a sec. Earnings per share, the estimate was about negative 69 cents a share, and it was actually negative $2.90. So now we definitely saw the deep dive back into them not being profitable, and that's been my prediction. But in terms of the positive things that have happened in this company, these things look really negative, on the surface. And as you guys probably are quite aware, I think this company can almost go either way. I'm invested in it because I think if you want to be in the space, it's a good company to have a small position in. These look bad on the surface. However, there is some other things the company's done that actually kind of gives them a lot of credit. So revenue is up 33.2% from Q1 2018. So a lot of the analysts and a lot of the financial websites were talking sequentially, and so sequentially means from last quarter. So the percentage was actually down from last quarter, but just like a company like Apple, well, Apple's a little bit more seasonal. It's probably more accurate when you're looking at companies to only compare it to the year-over-year results, unless there's some specific reason you want to compare it sequentially. So 33.2%, I mean, that's the revenue. It's up that much. Yes, it was down from last quarter, and there was reasons for that. But still, that's very impressive and shows the growth in the company. The automotive revenue itself was up 36.1%, and again, sequentially, it was down from last quarter, so that's something that was reported quite a bit. But again, we see a lot of strength there. When we're talking about the deliveries, maybe I should actually circle this a bit here for you guys. This is what analysts and investors are, they're very concerned with. So we saw deliveries of 63,019 vehicles. So this is actually up 110% year over year and actually 3% sequentially. So that's showing you how they're ramping up production. Obviously, that's something that Elon has been focusing on a lot. The Model S and the Model X were, almost 12,100. Now, in the conference call, they explained this away as seasonality and timing. I don't know if I buy that because we've seen some of the price cuts in these, and they've actually admitted to these price cuts as well. I would tend to think that the demand is kind of shifting away from these and going into the Model 3. And that is my concern, that after all this time, they're kind of getting a little bit outdated. However, there is the aspect to it that, no other real vehicles have caught up, although I think that they're going to catch up. During the autonomy session, Elon was basically saying we've given years and years and years for other companies to catch up, and they really haven't, even to the S. Well, I think people are going to start looking at either the Model 3 or they're going to start looking at some of the competitors. So that's a concern. So that's what's so extremely difficult about manufacturing, right? Is that even when you have changes in your lineup, you have refreshes of your vehicles, that's difficult, right? So now they're focusing on the Model 3 ramp. They almost had 51,000 deliveries. So we saw some really positive results in terms of ramping production. However, again, we're seeing the profitability hurting a lot. So let's go take a look right now at the report that they put out. Let's start at the top of the page here. So the report starts out by saying GAAP operating loss of 522 million. Yeah, that's right. So GAAP net loss of 702 million. And they're also including a non-recurring charge in there, but again, like, that's a huge loss, and we're starting to see these huge losses again. We're focusing, on cash and cash equivalents. Obviously, this is something that's on investors' minds because of capital raises. Are they going to run out of cash? But their cash is actually at $2.2 billion, so that's down from last quarter. The reasons that they give that cash is down is because they had that convertible bond payment that I was talking about in my last video. So that really hurt their cash. But at these levels, at the rate that they're going, I really do think that they're going to have to do another capital raise. They also mentioned here that they revealed the Tesla Model Y and started production in full driving computer, but we'll talk about that after. Another interesting thing I found in here was talking about the revamp of the vehicles. In summary, they've basically overhauled their flagship models with better range and performance. So now we're seeing with the Model S over 370 miles, which is extremely impressive. However, I will mention here that now we're seeing companies like Rivian having a truck that'll have over 400 miles. However, that remains to be seen. Another interesting thing I found in here was it said, unlike Model S and Model X, we do not build Model 3 vehicles to order. Rather, given its significantly higher volume, we build different variants of the Model 3 in batches, including regional versions. And every vehicle that leaves the factory initially becomes inventory. So, that's something that actually has quite a bit of implications in terms of timing. And Tesla explains this quarter as not having as much revenue and vehicle sales as a result of timing. He's saying a lot of them were shifted, into a different quarter, and some of them were actually, from last quarter were rushed in because of the EV tax credit coming out. So a lot of this has to do with timing. So, we see the demand that we're seeing in the Model 3. So I generally think that maybe this amount of revenue is not, the miss at is not as bad as people initially thought. Again, they go on to talk about the Gigafactory Shanghai and the Model Y. Not too much information on the Model Y except for the price being at about $48,000, and I think there's going to be a lot of competition in that market. However, it says we intend Model 3 to be the first step in a platform which we can cost effectively and quickly replicate across geographies and vehicle types. We have spent years developing this platform, and Gigafactory Shanghai and our planned Model Y production line will be the first step to reap the benefits of this investment. Learning from our experience, we can now build a second generation Model 3 line in China that we expect to be at least 50% cheaper per unit of capacity than our Model 3 related lines in Fremont and at the Gigafactory. So that was kind of interesting. They're talking about the effectiveness of actually producing in China. They also go on in this report to talk about how local banks are what's funding the factories in Shanghai. So the Shanghai factory as a whole, rather. So I wonder about the regulations on that. Well, is the Chinese government have their fingers in there? What's going on with that? More specifically, if they're going to start building them in China, are these going to lose their appeal, right? If they're going to be building them in China at such low cost, are they going to start shipping them overseas back to the United States or Europe? That's something that I think a lot of people haven't focused on. I think that's something that we should definitely think about for sure. The report goes on here to talk about energy generation storage. I'm not even going to cover this because this seems like such small potatoes right now. This could be something in the future, but as of now, it's really going nowhere. So it'll be interesting to look back at that in the future. So those are just some of the highlights on the report. Let's take a quick look now at the financial statements that they provide. So again, here we saw the revenue significantly down from December 31st, 2018. Now it's automotive leasing or sales rather is about $3.5 billion. So as you can see, it still is up from over a year ago. However, when you look at gross profit, we're basically in line, and net income as well down here is very similar to a year ago. Just like they said here, the cash and cash equivalents is down to about $2.2 billion. from 3.7-ish billion if you include the restricted cash. Looking at their liabilities, man, some of these look pretty nasty, the amount of debt and things like that. Looking at their cash flow statement here, there wasn't too much interesting here. The only thing I found a little bit interesting was on their operating cash flow. They have a line saying operating cash flow related to repayment of discounted convertible notes. So that negatively affected their cash flow, although their cash flow from operating activities is negative anyway. It was just kind of strange to see it there. As far as I'm aware, usually something like that would be in investing activities. But they did mention that on the call, and I don't know if you guys know anything about that, why that would be there. Put a comment down below. They did say going forward though, they expect to be operationally cash flow positive going forward. Then again, I don't know. There's been a lot of promises from Elon that haven't come to fruition. So that's be something that I'll be watching as well. So a couple other quick things that I got from the call was, most likely not profitable in Q2 going forward. So before Elon said, well, we're going to be profitable going forward from this period on, well, that turned out not to be true. So I find these things kind of really disappointing. Like, I know that it's a very difficult thing to do, but when he has all these grandiose plans and he's making these promises that he can't follow through with, I personally don't like that, even as an investor. Again, semi is going to be starting 2020 now, a year later, production. So everything, as we know with Tesla, is always pushed ahead. They're missing targets, but I get a little bit more and more antsy when I see more rivals coming in, especially companies like Ford investing $500 million in Rivian, stuff like that, right? We'll talk a little bit about that as well. Also, they mentioned within a month they're going to be having the insurance. No information really given on that. On the surface, it seems like a good idea, but the complexities of insurance, how is that going to work? Is this just another thing in the big pot of stuff that Tesla's going to do? It would be a great thing if they could get it to work, but I can't help thinking they just got too much on their hands. So now I'm gonna show you a couple little things that I saw in the Autonomy video. Well, it was actually a conference, and I watched the video afterwards because I didn't watch it live. So they started off with all this scenic Tesla shots. It was actually kind of an impressive video. It went on forever though. It went on for a really, really long time, and I was wondering why it went on for such a long time. And then I realized that, again, Tesla was late. I think they were like an hour late for their own conference. So going back to what I talked about before, that's kind of funny. So the video started with Tesla explaining that this is something that they figured they should do, and I agree with it. I mean, a lot of this was over our heads. However, there was a lot of useful information, and it actually made me kind of really even more bullish on the company. So it started with this guy coming out, basically describing the architecture that Tesla had built. They're building their own chip and why it's better in so many ways. There was a lot of talk about redundancy at the beginning in terms of them being two chips, things being double checked by one chip and the other chip. So obviously they were focusing on safety at first. So Elon went on to say, kind of summarize it, and he said this.
The general principle here is that any part of this could fail and the car will keep driving. So you could have cameras fail, you could have power circuits fail, you could have one of the Tesla full self-driving computer chips fail, car keeps driving. The probability of this computer failing is substantially lower than somebody losing consciousness. That's the key metric, at least an order of magnitude.
So the next guy that came out was, I believe he's one of the top computer scientists in regards to neural networks, these types of things. And he actually works for Tesla now, and I actually really like this guy. He explained things a lot. So Tesla's been focusing on Tesla Vision. So they have these 8 cameras around the car, and what they told us in this presentation that I really didn't know was that these cars are always recording, and these cars are always sending this information, this data, these cameras specifically back to Tesla. And what they're doing with this data is they're using it to train neural networks. Now, neural networks seem to kind of like complicate things. I'm not fully aware of them. Like one analyst said at this conference, he said, I understood about 10% of what you said. But this guy did a pretty good job of, explaining this in ways that most people could associate things with. So he was basically showing the iguana here. He was saying, we see it and we automatically, because of the way our neural networks work, we know it's iguana, but basically a computer sees this. And they just, they just see pixels and colors, and if you look at many different types of iguanas, they could be different colors, or the same one could even be different colors. So he said these neural networks are really stupid, so you basically have to feed the same information back in it over and over and over again every time that it makes a mistake, and over time it basically learns. I mean, that's the gist of it. It got quite complicated. He did the same example with, I believe this is some kind of, I can't remember. Somebody knows the name of this dog. Mention it down below, some Asian Shih Tzu or something. And he kind of shows a picture here where he shows that, we can easily as humans pick out the differences, but as a computer, it's not so easy. So basically what it is, it's like this big feedback loop that sends, the information back to Tesla whenever there's an error. They fix it or they run it through their system, and then the system sends it back to the cars, and it tests again. So most of this is running on shadow mode, meaning that the car is predicting what it would do, and it sounded like in a lot of cases it's sending, when it knows it's wrong, it's sending that back to Tesla. I'm not 100% sure about that. So it was very, very interesting. So here was a comment that actually Elon made about what I've been talking about right now.
Everyone's training the network all the time, is what it amounts to. Whether autopilot is on or off, the network is being trained. Every mile that's driven for the car that's hardware 2 or above is training the network.
So Tesla also went on to speak about the Tesla taxi. They expect to have 1 million vehicles on the road by, I think, somewhere around 2020. And this is basically where people can opt in or opt out to use their vehicle as a taxi for much cheaper. And he's saying 1 million miles on these vehicles. So that's something that I've always been really negative about with electric vehicles, that eventually you're going to have to replace the batteries. To say that you can have this kind of mileage is kind of mind-blowing to me. But we are seeing technology get better and better. So that was a quick summation of what I saw. I mean, it was like 2 hours long. I would really recommend, if you're interested in this, going and watching it because it was really fascinating to me. I didn't understand the differences between Tesla and other vehicles. Tesla's, Elon was basically saying radar and LiDAR are essentially garbage. He was saying there's no reason to have them. As humans, it made a lot of sense intuitively what he's saying. The way they're training their cars is that as humans we see, that's how we drive. We don't use echolocation or whatever, right? So he's saying that that's vastly more powerful, whereas competitors are using a lot of LiDAR. You see these autonomous vehicles and you've seen the things on the hood go around like that. That's LiDAR and radar, and he's saying there's a lot of issues associated with that. So people have always thought of Tesla as being in the lead in terms of self-driving, but there's been a lot of reports that they're actually pretty far behind, like behind competitors like Ford and stuff like that, because Ford is actually testing it behind the scenes. But Tesla's argument is that that kind of technology is not the greatest, and that to get millions and millions and millions and millions of miles on these cameras and being able to use that to train the neural network is involved. It's just invaluable, and I can see that. And now that's really made me believe that Tesla actually is ahead of the game, because I really do think that is the way. I don't know much about neural networks, but if they can get that to work and they have that amount of data, that's huge, right? That's huge. So I'd like to see how other competitors respond to that. Now, on that note, I wanted to talk a little bit about Tesla and Tesla shareholders. So I want to think, usually whenever I've had my bearish case against Tesla, I made my one video where I was kind of negative. I was talking about how there's no way it's going to $4,000 a share or $3,000 a share or whatever it was. People will say something like, well, Tesla's going to change the world, or Tesla's going to, fix this problem, or they're going to do that. And I think fundamentally, if Tesla continues to do what they're doing, they will do that, or they will change the world. But I think there's a big difference between a great product, a great idea, amazing, and a company that's able to survive. Like, if you could be selling the best thing in the world, but if you're not financially viable, that company might eventually die, unless you can, ask such a premium for it that you can remain, in existence. But this technology isn't proprietary, right? So I think a lot of the discussion that's been going on lately has really made me more aware of this. People are not making the distinction between an investment and an amazing company. I could say something negative about the company's financials and people might attack me and say, well, you don't believe in the vision. That's not what I'm saying at all. What I'm saying is that financially, the way it's going, taking too much on, I love that. I love that he's got semis going on, that he's got all this stuff going on. But in reality, the company needs to survive. The company needs to be able to sustain itself, right? So no matter how great the company is, it has to be financially viable. And that's why if you ever watch my videos and you're kind of confused why I'm a shareholder, but I'm really bullish at, a lot of times, but I say I like Tesla, that's why, because I love Tesla. But I'm kind of bearish on it financially speaking. And, it's a bad position to be in when you're investing in it. As you guys know, part of the reasons I invested in it was because he said it was going to go, that it was going to be bought out. And kind of like an idiot, I believe that, and I figured, okay, this is a company that I love. Financially, I don't think it's going to be great, but if somebody's willing to buy it, I jumped in. I was on that news really quick, and I ended up being up quite a bit of money. That turned out to be fraudulent, so now I'm still holding it. I could sell it as a loss, but I'm not going to because I think it's a space that he should be in. There's a lot of different things that can happen. There's a lot of different things that can, because it's such like a cult stock, there's a lot of things that could drive the stock up. And I like having a speculative stock in there, especially if it's one that I love. So I hope that kind of made it clear, my thoughts on it. And when you guys are looking at the company, try to differentiate between those two. Because sometimes I do the same thing with other companies like Apple. I think, what they're doing is so amazing that I might get blinded a bit. But you really got to look at the numbers, and you got to look at the potential of the company financially. And it is there, guys. It is there. But as of now, it's not looking great, especially when we see the competitors coming in like Ford. We don't know what they're doing. I was just watching a video on Rivian just tonight, and that sounds quite amazing. Under $60,000 for a truck that will go, over 400 miles. Is Tesla's going to be like that? But by the time Tesla gets in production, Rivian's already going to probably be out because they're going to be the end of 2020, I believe, delivering to customers, whereas Tesla hasn't even started the semi yet, which would be 2020. So that's my thoughts on it. Again, guys, love to hear your thoughts on it. Make sure you comment, like, subscribe. It really helps the channel, helps me make these videos. Sorry I was a little bit late on this one today, guys, because I've had a lot going on, but I really wanted to get the video out, and I really love to hear what you guys think, especially what your thoughts are on the autonomy side of it, and investment versus an amazing company. Where do you see that distinction? So that's going to be it for today, guys, and I'll see you in the next one.